Hello, everybody. Kirk Spano, Scott Shooter Henderson, Major Markets Update. Scott, how are you doing?
I am recovered, I think. I'm good. And you?
I'm always good, man. I'm always good. Everything's good. Going to Super Doug at Fort Worth for the oil convention and following that up with some time at the World Series of Poker. I got summer in Wisconsin, which awfully hard to beat. Yeah.
I agree.
It could be worse. I could be stuck in Houston.
Yeah.
How do you put up with the summer down there? Everybody talks about snow in Wisconsin. What about Houston in the summer? Isn't it like 120 degrees and humid?
It's pretty hot, but it's not, it's only humid when we are in the rainy cycle. So, I mean, once you get, it's not like Florida where it's a constant, like a pea soup. It's not the same thing. I mean, we do get that for about 2 months, but that's about it.
So it's not Miami.
Yeah.
All right. What is going on?
Well, let's jump into this. Okay. I'm going to start off with the dollar here because, we have, I think, quite a little bit of volatility ahead of us. And the challenging part is really how deep it gets. And I think the dollar is a big factor here. Now, what we're looking at is a weekly chart, and our primary wave count. So our primary wave 2 is just in, and our primary wave 3 is way the heck up at 125. That is going to be a lot of heat if that manifests. So it's actually my hope that it doesn't, because we could end up in this sort of prolonged bear market. And that's not going to be fun. Let's put it that way.
No, that would be deflationary. So that means there would either have to be a mistake from the Fed in light of, Congress being idiots, or there'd have to be more war. I think it has a hard time breaking out from the top that we saw a few months ago, but even just retesting that recent top where your blue line is going to keep pressure on the market for a little bit.
Yes, it will. Yeah. No, we should continue to see heat at 106. I mean, that's, just the slow grind that we're seeing now is what we should see. So now, ironically, I'm just going to flip off, and utilities we don't actually have a flight to safety here yet, which actually is surprising to me. All right. And I'm going to tear off of that. At the same time, when we sold off into the weekend, the VIX really is like nothing. All right. So there's not a lot of fear in this. It's very organized. All right. Now, jumping in right into the SPY, I'm looking at a pretty deep push from here, maybe down to 474. So maybe 50% back is a viable number there. So, and then let me just migrate to risk or the levels here, because that's really how you look at this as far as the market. If conditions don't change, AKA specifically Iran, I think Iran's the issue, then I think we could, see our second or third VWAP line here, maybe down around 498.09. Seems like a balanced spot for us to come off. And the mound structure or the roll that's in the tape sort of supports that. But right now, our 512, manifested. Right now, we're in the process of heading towards that 505. Any questions on that?
No, I mean, these are all very similar to the things that I have on my charts. So, I've been thinking that we'd get a little under 500 on SPY and then resume the rally.
Awesome. Okay, let's take a look at the NASDAQ. Now, we should see a decent drawdown in the NASDAQ, but not as deep. Notably because Google and Amazon are holding up, and I think they're going to hold up. And on top of that, the MacBook news on Apple pumped Apple. So you got Google, Amazon, and Apple that are holding up well. So I don't think we're going to have as much a drawdown. Right now, I can see maybe 415, and then we should continue our leg higher. Any questions there?
No, I just wonder what's going to happen if we are indeed at peak Apple.
I think that Apple will continue to grind along, provided it doesn't have any major missteps, like Boeing, as an example. Can't let the doors of the plane fall off. All right, looking at the Russells, I think we continue to come off here, and it's got a little more downside than the NASDAQ. All right, so let's look at TLT. I think we're close to the bottom here. I mean, we should have come off a little bit more. However, the Fed cuts, then it's going to flush below R2, and it'll be a 3 drive down. So about that 89.35, which it's already printed this past week, is about where I think our low is in. So I'm sort of waiting to see what happens with Iran before I jump long. Actually, I don't want to be long anything until the Iran issue settles a little bit. I want to see what their retaliation is and whether that escalates a little bit.
I will tell you, Iran has been warned.
They're going to retaliate. The question is whether or not it's going to be escalated. Are we ready to do that? That's really where we are. Iran has always responded.
The one thing in 30 years that I've learned is that everybody talks their book, and the trader collective talks their book week to week and has almost always been proven to be wrong. I mean, every now and then they get one right, but for the most part, the narrative of the week or the month almost always proves to be wrong. And it's just a way to push people in a direction, and it's a waterfall. It's the big guys telling the medium guys, telling all the small guys, and each group is bigger, right? But controls a smaller amount of money. And I think that the narratives around the Middle East are wrong. I think they're almost always wrong. Iran can't afford to have their oil supply disrupted. Thus, they'll just do something that looks like it matters to their people that care about them. Like the urban folks in Iran typically don't support the government. It's the countryside folks. And, so they'll get something from the mullahs that they can go, ooh, yeah. But beyond that, it shouldn't matter much. And that's why I think oil's going to come off. I think that, OPEC is having a hard time controlling the price of oil as hard as they try, because you are starting to see certain countries not listen to OPEC anymore. And I actually think that OPEC is really close to collapsing. For the short term, I don't really care too much about. To me, the short term is how do I use it to play into the longer term? Yeah. And which is what this call is about. And as far as gold goes, remember, I've twice said that we're going to see a gold bull market in the last 6 years, and proven to be right. And I'll just tell you right now, I originally thought that gold would get to 3,000 an ounce, and it might. However, the recent rally has been unsupported. If you take a look at the inflows and outflows on the gold ETFs, money is coming out of the gold ETFs. That means there's big sellers of gold right now.
But you know who's the buyer?
It's China.
China and Russia.
Yeah.
Brazil, Argentina. Yeah. And that was one thing that sort of was in the background when I was looking at the issue with the dollar that was sort of catching my attention, because I'm seeing, basically central banks taking on gold risk. And I'm like, well, why in the heck are they buying gold up here?
Because they're trying to disrupt the dollar.
But you know what was ironic? Yellen visits China.
Right.
The next day, they have their largest gold purchase.
Right.
What if Yellen notified whoever, right, that, hey, unfortunately, we're concerned about inflation. Our only choice is to elevate the dollar for a short period of time to yank it down. What that does is it takes down the inflation in the U.S. aggressively and pumps it throughout the world.
Where do traders even come up with this shit? Oh, man, it gives me a neck ache, man. Look, Yellen went over there to say, look, we'll work with you on certain things, but stop being assholes. And we know that you need us more than we need you, but the world needs us both. So either we figure it out or we're going to jam it to you. That's the message. Biden has been nothing but tough on China. I mean, not the fake Trump talk, fake tough. I mean, but like real tough. And the gold is Russia and China and a few other countries thinking that it somehow matters to the dollar. Look, man, there is so much gold sitting around doing nothing, just sitting there. Big bricks of gold just sitting there doing nothing because there's no industrial use and the jewelry doesn't cover it. Gold is not a big deal. So the next sell-off in gold gets to what, and then what is the next rally? Because you had it looking like it was going to get to 3,000 a couple of years out.
Yeah, it'll get to 3,000 by 2026.
Yeah. So we're close to the peak, like I said, the intermediate peak.
Yeah, but that could extend to.
So 3,000 whenever they have to really cut interest rates.
Yeah.
So boomer crisis when we do QE again.
I mean, this right now shows as an ABC, but this could be drive 1. This could be drive 3. Drive 3 would extend us to about 26. So it still could morph into a 5-wave to the upside.
Right. So I think the play here isn't gold. If you think that, I mean, gold is not going to fall back to 1,500 or 1,200, but I think actually Newmont Mining is your gold proxy now. So it goes back and forth between gold and gold miner. And I think it's back to gold miner. And I think specifically Newmont, because they're a member of the S&P 500 and they get those inflows. Barrick doesn't get those inflows. None of the Canadian companies get those inflows. The gold trusts don't get those inflows. Newmont is either the cheapest or second cheapest producer out there. They've got a lot of American mines. They're very de-risked, and they get S&P 500 inflows, which, folks, if you're a large cap and you're not getting S&P 500 inflows, why on earth would you invest in it? So, I think Newmont Mining is the place to look. And I'm bringing this up because I got people talking to me about, should I buy gold? And they didn't ask me when it was 1,400. They asked me when it's 2,300. So, no, you shouldn't be buying gold anymore. Like I said, I'll stick with buy some jewelry, buy some little tiny gold bars because they're cute. But, gold is just a shit investment right here.
I wouldn't disagree right at the moment. And ironically, talking about miners, both Goldman Sachs and BlackRock have approached the miners about buying Bitcoin directly from them.
Over at Bitcoin, yeah. It's why I'm in love with Marathon Digital. I think not only do they make a ton of money on the Bitcoin because they're got the best technology or among the best technology, but the fact that they have a gigawatt of energy generation already, a gigawatt, they're a utility. They're a utility. They're an independent power producer.
Mm-hmm.
So anyway, gold futures dip, and then when there's a crisis, it'll go back up. What about Bitcoin?
Well, Bitcoin, we're building out a nice flag here. I'm showing the daily mainly because I just want to show volatility. It doesn't show on the weekly.
Okay, we're looking at the gold chart right now.
Okay, let me go ahead and make sure
I know, I've got you bouncing around. That's my fault.
No, that's all right. Looking at the right one now.
There you go.
Okay.
So baby dip.
Yeah, baby dip. Yeah, but I still think it accelerates. I think this whole leg right here is one, and then we extend further. We've extended this entire leg up. So why would the MO change? That's the trend is your friend until the end. So we've just broken trend just a tad bit on this right here. So it's kind of an overshoot, which always to me just gives me a visual of, hey, it's going to end, but we're going to continue to leg higher. So, whatever spooked the markets this week, ultimately what it was, whether it was Iran or whether it was inflation, a combination of the above, or what Bullard said, or et cetera, we never ultimately know. We just assume that was the case. Be like everything else. It'll be old news next week. So, I would assume the uptrend continues. We head towards that 79.8650. Then we get a decent back test, or we don't and we extend. Those, I think, are the two outcomes.
And just to make clear something I was saying earlier that I didn't get to finish, the trader narratives week to week are an excuse to create some fundamental slack. So if valuations are all high, which we covered already, then they make up a narrative. It doesn't matter what it is. It's just going to be a headline. And it's really just the fake news that they need to create some slack in the valuations again. And that's what this pullback is. They can say it's inflation. They can say it's Iran. They can say it's aliens. I don't care. But it's an excuse. It's something that they put in the trading rooms. It's something they put on the Twitter. It's something they put on Discord. Oh, let's create something that people can rationalize because really we just need valuations to come back 5 or 10% so we can reload the bazookas. That's all that's going on. And it happens over and over and over and over again. And these week-to-week trader narratives are shit. They never play out. 4 out of 5 times, they don't make any sense at all. And that's why you can take the other side almost every single time. You just have to have a bit of a lag, right? You got to let them play out their hand. And then you zap them. Check raise.
You good?
Yeah, my coffee kicked in. Sorry about that.
Yes, that's fine. Great analogy. However, when, I'll use my trader narrative, and I refer to it as a bias. Okay. Just like about 2-3 weeks ago, I shot you, I was asking you questions directly because I look at it to determine whether or not we are going to continue in the direction we're going or end and get a reprieve. So I'm looking for the directional change. I really don't care what happens before. I really don't care what's after. But if I can catch that 2 drive to a top, confirmed low, and I'll just use Bitcoin as an example. We have a confirmed high here on the March 24th, right? So what are we going to get next? We're going to get that divergent high. So I just want my bias to, I have a lot of conviction that we have one more leg to. So that's my trader narrative on Bitcoin. A lot of bias, like 95+% chance that we head higher first, especially with this kind of consolidation that we have. And then finally, let's take a look at your favorite paper here. I bet, nice consolidation, but I still think we run to about 67 first and then head back towards that. There should be a very deep retrace there at that point, which happens to be consistent with Bitcoin, by the way.
Yeah, well, it would be. So in the 6 months after the last 3 Bitcoin halvings, there's been big rallies in Bitcoin.
Yep.
And then there's a breather, ABC correction generally, and then another big rally.
Mm-hmm.
And that usually plays out over 2-ish years. So if we get the same patterns that we've had in the past, you'd be looking at around a 400 to 600% increase in Bitcoin from the time of the halving. The last one was 700%, and the 2 before that were bigger. And they've all come down. Why? Because law of small numbers getting bigger. So we should expect Bitcoin from about the current level to be 400 to 600% higher 2 to 3 years out. And that is just mind-boggling when you think about it.
Yeah. Numbers that I see, obviously our first target's at 151. You're looking at my Bitcoin chart now, right?
Yes, sir.
And that's all equality. That's not extended or an elongated move. It legs up,
So that's basically the 400% scenario.
Well, this would be, from 67K to 235, our
almost 4x.
Yeah.
So folks, if I told you could put your money in Bitcoin today and make 400% the next several years by the end of the decade, I'd say the next 4 years, what would you do?
I'd have at least 8%.
I mean,
yeah.
I asked that question on Wolf Financial on Twitter the other day. I said, look, if I told you that I have a bank stock that pays a 5% dividend that's probably going to be 600% higher by the end of the decade, would you keep trading, or would you find something else to do with your time? I don't know. I mean, there are people out there that think they can trade their way to a 600% gain in the next 5 years. You're maybe one of the only people I know that can. But almost everybody else that I hear talking about it, I'm just like, dude, go get a part-time job making pizzas.
It's a lot of work.
Money. It is a lot of work.
It's a lot of work.
You're better off taking a $20 an hour part-time job.
Oh yeah, I just happen to love it. That's all.
Yeah, but you make, dude. I've been watching you for a few years. You make pretty grotesque gains. I mean, it doesn't make sense. And this is why I give you shit about the trader narratives. You should be saying, the trader narrative is this. I don't freaking know, but this is what my chart says. Because you don't need to buy into the trader narratives because they're shit, and they're shit. 4 out of 5 times they're shit. So just say, look, they're trying to talk you into doing dumb shit. Here's what the chart really says.
Yeah.
So anyway.
Well, that's what I've got, bro.
All right, folks. I've been trying to get IBIT at 36 for a few weeks. And
keep scaling.
It got to 37. I did get an order executed at 39. I don't know.
Stop knocking around. You're going to miss it.
Yeah. Is it under 40? I mean, I wish I could sell puts. But I think I'm just going to round it up. I actually, I'm close to that 8% position everywhere.
Yeah, but you can sell puts on Coin or Monster too. I mean, Monster's a little bigger, but.
Well, and that's what I've been doing. I've been selling the puts on Marathon.
Yeah.
So to me, I want at least 1/8 of my portfolio somehow influenced by Bitcoin. So that's 12%. So if 8%'s in Bitcoin and I own some Marathon and I own some Square and I'm selling puts on Marathon.
Yeah, and Square just had a decent pullback too, so it's a good spot again, I believe.
Okay. Well, yeah, I'll look for that chart over at Fundamental Trends.
All right. Well, I appreciate you having me, buddy.
Yeah. So I changed the chat on Fundamental Trends. I got rid of the Global Trends ETF. So I merged it with the macro. So the macro and ETF can all go in that one spot. And I think that's a good place for people who are just a free subscriber over at fundamentaltrends.com. Check out the group chat, the macro ETFs and special reports group chat. We're not going to give you real-time alerts or anything over there, but you get updated charts and some talk. And I think that at a minimum, it'll be helpful for you deciding what your asset allocation is going to be. And I'll just say, I manage other people's money, so I can't put client money into Bitcoin at the levels that I have mine. I mean, I'm over 25% and growing because it's the fastest growing thing in my portfolio. And I'm not telling anybody to do that. I'm just saying that if you can wrap your head around what Bitcoin is, what the risks are, and what's really going on, I don't know. I think you're seeing the emergence of a new global currency, and it's not going to be the one that consumers use in the West, but I think in emerging markets it might get used. But I think for sure on corporate and sovereign balance sheets, you're going to see it there as a currency hedge, as a dollar getting too strong or too weak, as a way to not have to deal with China. Yeah, and a way for emerging markets to consolidate their power, right? I mean, I just think that it's emerging like an unspoken, semi-spoken, kind of spoken euro for the emerging markets. I think that's what's happening. And it's going to take years to really verify, but I get this stuff right pretty often. And I think something would have to happen opposite side for it not to happen, right? There'd have to be an offset somewhere. Like the entire West conspired to get rid of it. But I don't know how they would. I think the cow has left the barn, my friend. I think the cat's out of the bag. Pick.
One day we may hear the CIA created it.
But I think we know that it was an Australian guy that created it.
I think not Australian programmers in America in the Fed.
Well, they've analyzed the early communications. It's almost certainly an Australian initial developer, or a couple of developers, but probably he's dead. And it was designed to help the Chinese get money out of China. That's what it was designed for. And at least that's how it was adopted quickly, because the Chinese really moved a lot of money out of China using Bitcoin initially. So, who knows how it exactly started, but where it's going right now, I mean, emerging market adoption and OPEC nation adoption and China adoption and Russia adoption, I mean, and family office adoption, rich guy adoption, the financial industry creating ETFs. I mean, it's a snowball, right? It's just getting to be a bigger and bigger snowball.
It's a total scarcity story.
And that. Yeah, I saw a good chart on that the other day.
Yeah.
So
I mean, that's why Goldman Sachs is going to the miners directly to buy Bitcoin.
Yeah. I think the upside on Marathon Digital is to over $100.
Yeah, and by the way, they're increasing their reserve level too.
Yeah,
or they did going into the halving. By the way, the halving is the 20th, so we should have the full migration done by the 22nd. Okay. So where miners land at that point, if you don't have a position on in miners, that's a good spot to scale from that point on.
Yeah.
All right, then I'm fairly sure we have a decent bottom at that point.
All right, folks, have a good weekend. I will edit this Sunday morning probably and get it up for Sunday. And in the meantime, I'm going to run out and see the grandkids for a little while.
Fantastic.
Yeah, have a good one.
Thanks for having me.
All right. You take it easy, man.
All right. Bye-bye.
Take care, everyone.